Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta, who is today in Paris. We're an hour away from the opening trade. Here's what you need to know. President Emmanuel Macron calls on French lawmakers to reject today's vote that would topple the government and throw the country into further political turmoil. We're live in Paris. South Korea's opposition submits an impeachment proposal against President Yoon after a day of chaos where the leader imposed and then lifted martial law. Plus, Germany's foreign minister suggests NATO membership for Ukraine could be part of a peace deal with Russia as the alliance meets in Brussels.
Anna, as you just suggested, the market theme of the morning is political chaos. You're seeing that writ large across the assets around the world that we track so carefully. The Euro Stoxx futures this morning are fairly flat. That's one area, maybe, of stability. Euro dollar, keep an eye on what is happening there. Christine Lagarde speaks a little bit later. And, oh, yeah, something's happening in France a little bit later on. Kriti's got that one. The Korean won has been on something of a wild ride over the last 24 hours as we see martial law being imposed and then lifted. The parliament striking back. So the Korean won has been on a roller coaster, I say. The euro dollar climbing and then falling against the won. S&P futures at the moment, though, are up by 0.1%. Powell speaks a little bit later on. Is it political chaos or Powell that is in control of the narrative today? The countdown to the opening trade, it starts right now. So, political chaos, that seems to be the market narrative right now. That is what everybody is having to price in. You see it in France and you see it in Korea. We are going to start in France, where Kriti has journeyed across the English Channel. She is in the French capital. It is our top story of the day. Kriti, what kind of a day are you going to have? What kind of a day are we going to see in France?
Well, Guy, Anna, it's a crucial day in France. Paris is waking up to what could be a historic day in France, potentially the very first no-confidence vote, the very first time that the special law, the loi spéciale, could be imposed by the French government for the first time in modern history. That's what Parisians and the French citizenship is waking up to this morning. It's crucial. In the next 24 hours, we're going to get two no-confidence votes at about 4 p.m. Central Time, local time here in Paris. It starts off first with the left bringing up that no confidence vote, perhaps with the support of Marine Le Pen. If that vote does not go through, Marine Le Pen and the National Rally will bring in a second vote. Regardless, Guy, and I think what you need to know here is that the odds are stacked against Prime Minister Michel Barnier. The question is, what does Emmanuel Macron do next going into the holidays?
Kriti, thank you very much. Kriti Gupta there in Paris. And Guy, in terms of where we are then, as Kriti was saying, two votes we get today. Yeah. So the drama slightly extended. Plenty of uncertainty as to what would happen if this government does fall. And if everybody, let's be frank, if everybody votes along party lines, it does seem as if this government will fall. But that's why President Macron is urging people to think about other things and to not cause that to happen.
Where is he?
He's actually not in France. He's in Riyadh. I mean, maybe his judgment is that it would be a sign of too much panic to stay at home. I'm not sure. But in terms of whether we are panicked, we have seen this sort of calm before the storm in markets over the last day or so. We were talking about this yesterday. 84 is where we are on the spread. Levels we haven't seen since 2012, but still, you know, it hasn't moved much higher in the last couple of days, which perhaps is a blessing. Euro is pretty stable at 105, but euro volatility has really increased over this period. We've been looking at that versus cable volatility. You can see that euro volatility is certainly elevated. It
does feel as if Le Pen's view is Barnier first, Macron second. That seems to be the way that the targets are presenting themselves.
If she is around to take on Macron next time around, and that is perhaps crucial as to how hardball she's playing this time.
The French situation seems relatively calm compared with what we've seen in Korea overnight and what we've been watching develop there. South Korea, obviously a firm focus of the markets, as we have seen martial law being imposed in the country briefly. Parliamentarians racing to the National Assembly to vote that down and to restore the democratic process. We now potentially see the president being impeached. That process now appears to be underway under treason charges. We have seen, therefore, significant volatility in South Korean assets over the last few hours. The Korean won depreciating sharply, the stock market under significant pressure. It's also worth noting that Japanese stocks have been responding quite strongly to this story as well. Defence stocks, particularly in Japan, obviously quite close were some of the best performers. The Japanese market just closing, defence stocks outperforming a lot of other stocks on that market as well today. Nervousness rippling across the region.
Yeah, I mean, Korea represents a lot of things, doesn't it, for different investors? There's the tech theme there, there's the diversification away from China there's emerging markets becoming developed markets. There are all kinds of investment themes. There's being at the centre of global trade flows. All of these things coalesce around Korea. And interesting, the Markets Live blog writing about how Korean assets, stocks in particular, have experienced a Korean discount over the last 10 years. And they say that this, of course, is just going to point in further in that direction. And, you know, Kospi trades at that discount, trades at a discount to book value, in fact. This is a country that wants to enter those developed market indexes. Yep. It makes it much more difficult to do that when you see scenes playing out as they did over the last 24 hours.
Caught everybody on the hop. Nobody saw this coming. The White House had no indication that this was happening, apparently. So it does also raise questions, I think, about sort of geopolitical stability in the region as well. It obviously has the North Korean issue to deal with. You've got the Chinese issue as well. Yes. 30,000 troops are still stationed in South Korea, US troops, and you wonder how the Trump administration is going to see that as well.
Absolutely, and this segues nicely into our next story, because I think we spoke to a former trade minister in South Korea who was saying, look, this is a country that should be preparing for the next Trump administration. Lots of countries around the world should be preparing for the next Trump administration rather than taking to these kind of tactics. And that takes us on to what's going on with Ukraine. The German foreign minister in the last 24 hours then, Guy, suggesting that NATO accession should be something that is on the table for Ukraine, even in some kind of peace deal with Putin, if that ever comes to pass. And this is interesting in the German context, because actually Olaf Scholz has been pretty lukewarm against accession for Ukraine into NATO. So that's something worth considering. What Mark Rutte is saying, and we've got defence ministers from NATO meeting this week in Europe, what Mark Rutte is saying is actually the focus should be on getting Ukraine to as powerful a position as it can be in before those talks, rather than talking about whether NATO membership is something that is, you know, to be gifted in amongst the complexities of some kind of conversation with Putin.
The security guarantees that are going to be required, do they go as far as NATO membership? Can you rebuild? Can you create any kind of a lasting peace that will allow a real rebuilding of Ukraine without some kind of a security guarantee? Because otherwise, the expectation will be that you just have chaos in Ukraine that continues, and that ultimately is what Putin will wait for, a tactical withdrawal followed by something else further down the road.
Yes, really interesting. And taking the sort of broader view of all of the political chaos and the violence that we're seeing unfolding globally right now. Mark Champion from Bloomberg Opinion writing really compellingly yesterday about, sure, there are plenty of domestic local drivers for all of this political chaos, whether you're talking about Seoul or Paris or Tbilisi or the Middle East or Ukraine. There are local drivers, but the fact that we are heading for another Trump administration and what the leadership from America is going to look like, how different it is going to be, is certainly worth dwelling on. Shall we tell everybody about what is coming up on the programme? We have a great roster of guests to talk about some of the big themes in markets. We will discuss the turmoil in France. We're joined by Maria de Mertzis, programme leader at the Conference Board, no doubt weighing in on the economics in play in Paris and the broader macro story as well. Fabrice Le Sachet from MEDEF. This is the lobby group for French business. Just what kind of tolerance does French business have for political turmoil right now? He's going to be joining Kriti, in fact, in Paris.
Looking forward to that conversation. Do you hide out in gold when it comes to trying to manage some of this political risk that we are seeing around the world? We're going to ask that question to Francisco Blanch, Bank of America Global Research Head of Commodities and Derivatives, Nanette Herschler-Fayedeb, Lombard Odier, EMEA CIO. How is she handling this political chaos? Gonzalo Gotazar, CEO of CaixaBank, joining us later. What are we seeing in terms of M&A? What are we seeing in terms of consolidation within the European banking space? What is happening in Spain? All of those questions, I think, relevant. And Jens Spahn, the German CDU lawmaker, is going to be joining Olli Kruk in Berlin a little bit later on as well. I think we've got the political narrative nailed this morning.
I think we really have. And it strikes me that Spain stands out as a sort of sea of calm in amongst all of this, which is an incredible pivot and something that we will no doubt want to get his impression on.
Is that going to be sustained, though? But you think about what is happening in Madrid right now. Under the surface, actually not too far from the surface at all, is quite a lot of political instability. Could Spain be next in terms of a name we add to the list of what we're seeing in Europe and around the world right now? In terms of today's agenda, then, we're dealing with this no-confidence vote. It comes in two stages in France. That plays out this afternoon, European time. At 3 p.m, we'll get ISM Services, that number out of the United States. We get the Fed's Beige Book a little later, and Christine Lagarde speaking ahead of an ECB meeting next week. Really interesting. Mary Daly, in terms of the central
central banking narrative, talking about a cut in December remains on the table but isn't certain. I thought it was interesting the wording she was using. We have to keep rates moving down to accommodate the economy. And I wonder maybe we're not hearing quite so much of that argument around this desk recently, that the economy needs lower and lower rates at this point. That doesn't seem to be the narrative that we're hearing very often, but we'll try and dig into that a little bit more.
Powell's going to speak later today. Is he going to push back? Is he going to nail the December cuts? I think that is a question the market will be looking for very carefully later on. You've also got payrolls coming up on Friday, a critical piece of data. So a lot going on in terms of that Fed narrative returning. But it does feel still eclipsed by what is happening with the geopolitical story. And
if we're all obsessed by the data, or are we wanting to try and get back to some of the data, despite the geopolitics, not sure the jolts gave us too much to go on. Stabilisation seemed to be the word I was seeing attached to the jolts report.
And maybe we'll see some PMI data emerging throughout this show, which will give us greater clarity as well. We'll look forward to that in the second hour. What else do you need to know this morning? The London stock market has shrunk at its fastest pace in over a decade. Roughly 45 companies have delisted this year alone, mainly as a result of M&A. Foreign private equity companies have been particularly active as bargain hunters have taken advantage of what some may argue are low valuations. The Wall Street Journal is reporting that Donald Trump is considering Florida Governor Ron DeSantis as a possible replacement for Pete Hegseth, his current pick for Defense Secretary. Hegseth, the former Fox News host, has faced increasing scrutiny regarding allegations about his personal life, and he is likely to face a tough confirmation hearing in the Senate. And one of the ECB's most hawkish officials, Robert Holzmann, says that any rate cut next week will be, quote, moderate. The Austrian central banker adding that the geopolitical environment indicates the price increases are more likely than unlikely. Another quarter-point reduction at the ECB's final meeting of the year is broadly expected. Christine Lagarde speaks to the European Parliament a little bit later on today. Compare and contrast the Fed and the ECB. Look at what is happening in euro-dollar right now.
Yeah, absolutely. Moving certainly in different directions. I mean, no surprise, perhaps, that Holtzman is taking this tack. If you look at that sort of chart of doves to hawks, he's always very much on the hawkish side. So if he's leaning towards 25, and despite others maybe wanting to go for something more aggressive like 50, that wouldn't be a huge surprise. But we certainly factor that into the thinking. I was drawn to Marcus Ashworth from Bloomberg Opinion. He was writing about how the ECB next week is actually going to be more interesting than perhaps on the face of it appears, because Christine Lagarde, in his view, has to deliver a message that the guiding obsession, the guiding priority is avoiding a recession. And that doesn't seem to be the line that we're hearing from Holtzman. He seems a lot more preoccupied by inflation and pickups in inflation.
It's also not her job. Let's be clear about that. Her job is inflation. Her job is managing inflation. That's the primary mandate by a country mile. There's a single mandate central bank. So recessions aren't really her purview. Nevertheless, it's obviously going to have an impact on inflation. But it's interesting, you talk about the kind of the hawks versus the doves on the ECB. I was talking to the Greek central banker the other day. He was talking about a need for caution. There's a lot of things happening in the future. Does the ECB want to stick a 50 basis point cut at this point and look silly maybe 6 months down the road where tariffs kick in and inflation rises again? There does seem to be a little bit of kind of wait-and-see approach, maybe.
Yeah, Christine Lagarde has downplayed the role that tariffs and counter-tariffs would have in playing into inflation. But we'll see if we get a little bit more on that, perhaps today and certainly into next week. Coming up on the programme then, a lot to deal with. We have the latest out of South Korea as the president faces a formal impeachment proposal. Plus, with France in focus, we'll take a look at the sentiment in French equity markets at the open of trade this morning. Up next, we'll be live in Paris with a preview of that crucial no-confidence vote ahead. If you have questions, please do get in touch. IB plus BBTV Go, whether you're in London or Paris or Berlin or Seoul, wherever you are, get involved in our conversations. Send us a message, get in touch with the team. This is Bloomberg.
So, President Macron, who's in Saudi Arabia, has called on French lawmakers to set aside their personal ambition and reject a vote that would topple the current French government. Far-right leader Marine Le Pen has vowed to support today's no-confidence motion called by the left-wing coalition. Together, the two groups have enough votes to pass the motion and topple the government.
I hope so, and it's indeed possible. It depends on the members of the National Assembly, each whom has a responsibility to the French people, to the voters of their constituency, and before France too, which is at a rather serious moment.
Michel Barnier, the current Prime Minister, speaking to French TV. Let's go to Paris. Kriti is standing by. Talk us through the day, Kriti.
It's going to be a historic day. The odds are stacked against Michel Barnier, although he, as you just pointed out, cautiously optimistic alongside Emmanuel Macron. Basically, what you're going to get is a procedural vote at about 4 p.m. local time. They're going to debate a motion that will initially be brought forward by the left, the NFP in particular. Marine Le Pen has indicated that her and her National Rally Party and their coalition will back the vote. That being said, just in case they don't have enough votes, Marine Le Pen will then lead her party in yet a second no-confidence vote. By the end of the day, Guy and Anna, Michel Barnier may no longer have a job, and that's where the next 48 hours matter quite a bit. But the spotlight shifts onto Emmanuel Macron about how he's going to move forward in terms of getting a French budget across the finish line.
Yes, and so what happens if Barnier is voted out then, Kriti? I know we talked quite a bit about how some of the ministers stay in caretaker roles and there are processes to avoid a shutdown, but there's still a lot of uncertainty as to the specifics.
So you won't get a shutdown the way you do in the United States. That is because of a very specific law enacted in 2001. I've been practicing my pronunciation all morning, so stick with me here. The Loi Spéciale, basically the special law in English. It basically talks about this idea that at the end of the day, if a caretaker government in the form of Michel Barnier or someone else, if Emmanuel Macron chooses, isn't able to get a budget through Parliament, the president himself can push the budget through, but it comes with a little bit of a caveat. Basically, they have to bring over the 2024 budget for the first few months of 2025. Now, that should be all right in theory, except what it does is create some very stringent measures on things that the French public and French Parliament would have wanted to spend on into the new year. A big example of that is defense, and that's been a major topic, not just in France, but across Europe and certainly in Brussels as well.
Kriti's going to keep us updated all morning. We're counting down to this French vote, two French votes, a little bit later on, as she says. Kriti Gupta in Paris. Kriti in Paris. We're joined now by Maria de Metzis, Economy, Strategy and Finance Programme Leader at the Conference Board. Good morning.
Morning.
How are French CEOs feeling right now?
I think they're worried about what happens next. The conditions that brought us here, which is really the French budget, will not be resolved then for another year at least. And that, of course, is not good for French finances. And I think they're worried about what this means for spreads, which, of course, the cost of borrowing is going to go up for them. And it's going to be a lot more difficult to make investments. So that's not good news for France.
So political instability, harder to make investments, higher taxes as well. Presumably that makes it harder to make investments as well.
Well, I think we need to see the new budget. Actually, in the current circumstances, we just continue as is. The budget continues as is. But that means that the French government will not be able to consolidate. The European Commission will be watching France very carefully and will demand that down the line France makes the decisions that it needs to do, the necessary cuts. So all we will get is a postponement of very hard decisions that need to happen.
Maria, we talked a lot about in bond markets how investors are weighing up the difference or lack of difference between French debt and Greek debt at this point, which seems incredible given what we saw back in 2011 with the Greek debt crisis. And yet there are differences, and one is that France has the support of the European, of the EU here. The budget, the plan it is trying to put through at least, has the support of the European bodies. Where does that go next? How much is that tested, that relationship between France, between Paris and Brussels here?
Yeah, indeed. First of all, I think this parallels with Greece just isn't appropriate. You're talking about 2011. The spreads for Greece were in a very different position where we are now. Greece has made huge progress since then, and now the spreads are actually a good reflection of the progress that Greece has made. If France is compared to Greece now, that is not problematic. The comparison is that French spreads has increased from where they were last year, and that, of course, creates that the direction of travel for France is perhaps a little problematic. But I think the relationship with the European Commission is indeed special. There had always been a French exceptionalism in Brussels and need to see whether this will continue. This is a very big test case for the European Commission, in my view, as well, whether it is going to hold France accountable for all that it needs to do or whether it is going to treat France in a special case again. My sense is that the pressure on the European Commission to follow the rules is very big, and they will be pushing France to consolidate and indeed, as I said, make the tough decisions that they have to make to bring the budget deficit down.
And yet some of the opinion polling suggests that opinions in France are turning against Michel Barnier and what he's trying to do here, which might not be a surprise to anybody. A lot of people don't vote for anything that feels like they're losing out or austerity. What arguments can Brussels make, can Paris make, to try and convince the French people that this is, in the longer term, the right path ahead?
Well, I don't know that Brussels can make any of these arguments. It doesn't work this way. Capitals don't want to hear Brussels telling them what to do. But the fact of the matter is France has got a budget deficit of 6%. It needs to go down. The reference value is 3%, a very big distance to cover still.
But do you think French voters understand why that needs to come down?
Well, I think they need to. I think there needs to be a communication strategy here which explains that 6% is not sustainable. France also has a debt which is above 100%, so at this point this can become difficult. It is important that the government, in all sides, all political spectrum, actually explains this to the public, because it will happen.
Mm.
How do French CEOs compare with other CEOs around Europe? Are French CEOs pretty much in line with the rest of Europe in terms of the kind of the data that you get surrounding CEO sentiment? What do you think we're looking at in terms of the compare and contrast? Because there's plenty of other problems around Europe. Europe is in stagnation. That seems to be the biggest one.
That's right. And I think one element that is common across all CEOs, and this is a survey that we've done recently, is telling us that European CEOs don't want to invest in Europe. They much prefer outside Europe. Conditions elsewhere are actually better than they are in the EU. And this is, of course, problematic. But it's also consistent with the current account surplus that we see in Europe, which effectively says that savings will not have a good rate of return in the EU.
And can anything change that? Because this is something that Mario Draghi has talked about a lot. This is part of his drive around competitiveness for Europe. He wants policy change that encourages more of that money to stay in Europe. And some of these CEOs you speak to, they're big fans of what Mario Draghi has to say. So, you know, it sounds simple, doesn't it? Just implement what Mario Draghi says and then the money stays here.
In fact, that's exactly what they said. They are very, very keen for the Draghi report to be implemented in full. They do, of course, have preferences. They would tell us that actually if there is one thing that needs to happen is simplification of regulation. That is very important to the CEOs, because right now the regulatory burden in Europe is exorbitant. And, of course, the second thing they want is deepening the single market. So this is something that could really help.
Do you think that's going to happen? Like, what's their degree of confidence that Draghi's going to be delivered upon, that red tape is going to be rolled back?
What we see actually in the first 100 days of the European Commission, their simplification of regulation is becoming a top priority. Therefore, a lot of resources will be put in trying to simplify that. Now, I would like to see that delivered. We have been talking about this for a long time. But it's interesting to see that in Mrs. von der Leyen's priorities, that is one of the bigger ones.
Can I ask you about tariffs? Because clearly we wait to find out what it is that President-elect Trump intends to put in terms of tariffs on Europe. And then we wait to see how Europe will respond. It's interesting in your survey that companies, not many of them, think that tariffs is the answer here. I mean, I suppose that's not surprising. But I wonder how this will play out from a European perspective, because there will be politically a temptation for some European politicians to say, OK, well, if you do tariffs, President Trump, then we will as well.
I don't think that the European Union wants tariffs. If we get tariffs, there will be a proportional retaliation. That's part of the approach that the European Commission always follows. So there will be counter-tariffs, and nobody wins from that.
Will they deliberately be of lesser in scale than the US tariffs? Will that be the approach?
No. It will be proportional. It will be entirely proportional. Any tariffs that happen to the European Union, there will be proportional retaliation. This is exactly what happened in 2016, and I'm convinced that this is what happened this time around. However, what I also think will happen is that Europe will actually try and talk to Trump and say, look, there are things we can do here, and defence is the biggest one. Europe needs to beef up its defence expenditure and will buy from the US, and that, of course, is something that can be negotiated.
Maria, thank you very much. Thanks for coming to see us whilst you're in London. Maria de Mertzis, Economic Strategy and Finance Programme Leader at the Conference Board. Coming up on the programme, don't miss our conversation on markets, commodities specifically. Francisco Blanch, Head of Commodities and Derivatives at BofA Global Research. A lot to talk about, whether it's oil this week, gold this week. Plenty in focus in the commodities space. This is Bloomberg.
30 minutes to the start of trade here in Europe. It's a busy day out there. We've got lots to factor into our thinking today, particularly on the geopolitical front. We're watching what's happening in Korea and also, of course, what's happening in France. Futures at the moment pointing slightly south. S&P futures pointing slightly north, slightly being the operative word there. We are waiting, I think, for Powell a little bit later on. We're looking for some clarity in terms of the French situation as well. Lots going on, but equity markets largely become. The bond market is going to be fascinating today. Are we going to see a a significant move in French oats? Are we going to see potentially some divergence increasing with Germany, or has that already largely been priced in? I think that's what we are trying to work out at the moment. That appears to be the narrative right now. We're also, of course, watching what is happening out in Asia. South Korea's main opposition parties have submitted impeachment proposals against President Yoon Suk-yeol. It comes, of course, after Yoon ended a short-lived, very short-lived martial law that prompted troops to encircle the parliament before lawmakers voted to lift it.
I will accept the Parliament's request and lift martial law through a cabinet meeting. However, although I immediately convened a cabinet meeting, the quorum for resolution has not been met due to the early hour. So I will lift it as soon as the quorum is reached.
Joining us now on the line from Seoul is Bloomberg's So-Hee Kim. So you talk us through the latest developments, particularly what happens next.
Sure. Just about an hour ago, 6 opposition parties, including the main Democratic Party, submitted a motion calling for impeachment of President Yoon. We don't have a full text of the motion yet, but the opposition parties made clear that their goal is to impeach Yoon and 2 other ministers over treason charges, alleging that the declaration of martial law was illegal. The Parliament will put the motion to the vote as early as Friday, and once it's passed, the National Assembly will formally ask the Constitutional Court to uphold the decision, which may happen in a few weeks from now.
OK, and we've seen markets reacting to this, So-Hee, so this clearly did come as a surprise. We've seen, of course, stocks on the back foot. We've seen activity on the Korean currency, and a lot of people talking about where this leaves international perception of an economy that is so important in global trade and represented so much to the tech sector and beyond. What does this mean, then, for the wider Korean economy?
Right. It was quite dramatic right after the declaration of the martial law, but the market has been a little bit stabilized this day. So before this chaotic situation happened overnight, the Korean economy has been already facing a tough situation with slowing growth and weakening won. And this political turmoil would not help boosting consumer and business sentiment in the near future. So I would say if this leadership vacancy continues for months, it could be risky as Korean businesses may scramble to figure out contingency plans over Trump's tariff plans. But there are some of optimistic views as well, as some investors and political analysts are hoping that the democracy of Korea may or could be even getting stronger after all this chaotic situation and hopefully fix these immediate internal and global challenges.
OK, So-Hee, thank you very much. Bloomberg So-Hee Kim in Seoul, taking us through the twists and turns of an incredible 24 hours in South Korea. That played out in markets, as we were saying. Stocks then into today's session under pressure in Korea. The currency in focus, a lot of volatility there. We also saw some money going into havens, and gold was amongst those yesterday. The political tension in South Korea and indeed in France pushing gold a little bit higher. Today we are pretty flat, pretty unchanged on the gold price. A lot of other complexities around what drives gold right now. Let's broaden the conversation and talk commodities and wider markets with Francisco Blunt, commodities and derivatives head at Bank of America Global Research. Francisco, nice to have you with us. Thank you so much for coming in. Let's start with gold, because the list of commodities this morning to talk to you about is really long. But let's talk about this. I mean, this was an event where we saw, or yesterday was a day where we saw geopolitics to the fore, driving the gold price just a little bit higher. But you said to us in the break there are clearly other priorities for gold traders. Right. What is in the driving seat?
Look, I think what we've seen in probably the last month or so after the U.S. election is a stronger dollar, higher than expected rates in the U.S., and that slowed down the run-up in gold prices. Why? Because remember, the main buyers of gold in the last couple of years have been central banks as a result of the freezing of Russian central bank assets. That's what triggered a large purchase of 1,000+ tons a year from that community in the gold market, and that can trigger a rally. So central banks, the problem they have is the dollar is getting too strong, right? So when you have to defend the value of your currency, you don't really have that much cash available to go out and buy gold. And that's why gold prices have kind of slowed down. To your question, is geopolitical risk still a reason to buy gold? The answer is yes. We saw it yesterday again. And we could see it farther out. I mean, remember, for the first time ever, we were saying rates in Europe trading bonds in Europe trading above swaps, right? So the market's clearly anxious when it comes to the rates market, what's going on in France. We are anxious about Russia, Ukraine, where we've seen an escalation of tensions. But of course, central banks don't have the liquidity right now, don't have the position to keep accumulating gold in large scale. So that's going to slow down the rally. So we think probably the next few months gold slows down, but we still believe $3,000 an ounce will be reached at some point end of next year.
Dollar down, gold up. That's it, right? If we see the dollar going down, you buy gold, because then therefore the central banks have more liquidity to buy it.
Yeah, and I think we need to see that uber strength of the U.S. economy kind of easing off a bit, right? I mean, that's been the trigger for the pullback in gold, just the U.S. getting too strong. And like I said, I mean, central banks may not having the balance sheet to keep purchasing gold at the same scale they have for the last year. So, but to your point, yeah, if gold, if the dollar finally starts to weaken a bit, if that super strong rates market that you have in the U.S., where you know the terminal rates now 4% for the U.S. next year. In Europe, we're looking at rates way lower than that. Maybe like, you know, we could see rates going down 2% or sub 2% throughout the course of next year, right? So it's that dynamic going on.
We'll listen to what Powell has to say a little bit later on today. The oil move yesterday, 2% plus. Does it stick?
Right.
Does OPEC have anything to do with this?
I mean,
have anything to do with this?
Of course, OPEC is in the background here. I mean, they're trying to decide whether to maintain the cuts for 3 months, for 6 months. They're trying to decide whether to cut more. There's a big debate going on in OPEC because every country within OPEC has a different budget situation. And that's the hard part, right? I mean, I think Saudi Arabia would like to see a higher price. Other countries do not care so much about that. There is an issue around market share. How much market share is OPEC prepared to lose, OPEC Plus prepared to lose in this world where this $75, $80 Brent price has encouraged a lot of U.S. supply? And there is Scott Bessent, the U.S. Treasury Secretary nominee, saying he wants to have 3% GDP growth, 3% budget deficit in the U.S., which I mean, that I'm not sure I fully buy. You definitely don't want to be long gold if the U.S. manages to slash its deficit in half and grow at 3%. And but also 3 million barrels a day of oil supply. And that I have a harder time saying because the market doesn't need that much oil.
Yes.
And that's OPEC's challenge.
OK. Yes, he's got a lot of targets that begin with 3, hasn't he? And you rightly home in on the oil one there. So what does that mean? What does that policy, and Trump's talked about drill, baby, drill. So more supply from the United States in a market that isn't sure it can deal with what it has right now, maybe still slowing China, or at least bumping along the bottom China, and OPEC Plus threatening to bring back more production.
Well, remember, the main issue is that the energy transition is about moving away from transportation fuels and moving into basically green electrons, ideally, right? And those green electrons, or maybe green molecules, they're biting into the transportation fuel sector. We are getting more biodiesel, more ethanol, stuff that kind of bites into crude oil demand. And on top of that, you're getting more electric vehicle sales in China. So to your point, so the Chinese economy is not just slow, it's also moving away from thermal, particularly oil. And that's creating the challenge for OPEC to regain market share in the world of rising U.S. supplies.
Is that
that's the
happening
bottom
more
line.
quickly than you anticipated, Juan Francisco? This was always coming, I suppose.
Right.
It was always about the pace of change. And U.S. policy we talk about a lot, but actually maybe China in the driving seat here.
Well, China's been the driver for commodity demand for 25 years, right? Throughout our careers, it's all been about China. Half of the world's oil demand growth has come from China. And most of the demand growth for all these commodities and just the demand outright is a China story. So that's been a big headwind for oil.
2 quick questions. Are the Chinese going to restrict rare earth sales? We saw some evidence of that yesterday. Is that going to be a problem?
Are they going to restrict
rare earths?
Rare earths. That's a problem for the world, for sure. Yeah, I mean, China holding back on these commodities that will create tensions, and I think will lead to more political decisions in the U.S. and Europe to support that market.
So if Trump goes hard on China, China will further restrict those.
I think that's I think we're starting to see that dynamic going on, right? I mean, there's a tit for tat.
And how much can the U.S. produce some of these itself? It has ambitions around some of them. But
well, you need to deregulate, right? Which is one of the things that Trump wants to do. I mean, the U.S. was once a leading nation when it comes to rare earths, and but it takes a long time to build these mines, right? I mean, the issue in the U.S. is very, very hard to build mines from scratch, and it is not particularly competitive in doing so, right? The U.S. doesn't have a massive industrial subsidy policy. This is something that China's done for a long time. So yeah, and I think it'll be an interesting dynamic to watch, but the U.S. will definitely experience some tit for tat on the sanctions.
Final quick question: is Europe ready for a cold winter?
I'm not sure it is, and Putin's been waiting for it. You know, he's been waiting for it for 3 years, right? We are coming into the third winter, fourth winter of Ukraine. We started in February, and end of the 22 winter. We had the 22-23 winter. We had the obviously last year's winter. It's been warm, right? And now we're going to potentially lose Russian gas with Gazprom Bank's sanctions, and Gazprom itself is setting up to stop flows into Europe of gas, and we think there could be a spike if the weather's cold.
We're a lot less reliant on it than we used to be, right?
We are, but still every molecule counts when it gets cold, and then I think we've made some mistakes on the regulatory front that have set us up for some spikes, right? I mean, Europe is forcing companies or countries to keep 90% storage levels in gas at the beginning of winter. And the entire curve in the natural gas market, which is still technical, is going into backwardation, which means now that the incentive to store is not there, right? Summer gas prices are very expensive in Europe. There's no incentive to store. We have a spiky natural gas market in Europe in 2025 if the weather is cold and those flows from Russia stop on January 1st.
Frost on the car this morning. Francisco, thank you very much indeed. Francisco Blanche, Commodities and Derivatives Head at Bank of America Global Research. Coming up, French assets firmly in focus today. Prime Minister Michel Barnier faces the risk of his government collapsing. We see 2 votes coming up. We're going to take you through the stocks that you want to be watching into that story. French banks in particular. You're looking at a live shot coming from Paris. This is Bloomberg. Fourteen minutes to the start of equity trading here in Europe. European bonds are largely open. We're seeing yields ticking a little bit higher, so something of a sell-off in European bonds this morning, but not a big one. This, of course, centres around what is happening in France, where the government faces a no-confidence vote, 2 no-confidence votes a little bit later on as well. Are we going to see the Barnier government falling? This, of course, centres around what is happening with the budget. The budget features 60 billion euros worth of tax rises and spending cuts. The French opposition is not happy about this. So what happens later? Kriti, of course, in Paris for us. Let's talk about this deficit. How dire is it?
Guy, Anna, this is a really crucial moment for the deficit. This could be the game changer. The budget that Michel Barnier had tried to pass through could be the game changer between 6.1% of a deficit in 2025 down to 5%. That is a massive difference for a country that has been past the EU limit for 7 years. That's the argument by Marine Le Pen and why the austerity story is so important. Guyana, we're standing right outside the building where the vote is going to happen at 4 p.m. local time. On my right, the office of Michel Barnier's party, the Republicans. On my left, the cafe where the socialists meet. Basically, this idea, the key voting bloc that could make this vote go through. But the irony of this entire thing is that even though these budget deficit worries are certainly there, I think one trader I spoke to here in Paris put it quite succinctly, which is that this is a crisis, but perhaps not akin to that of the Eurozone debt crisis of 2011. Those are the comparisons being made, but instead something similar to what we saw at SVB over in the States, that it is a concern, but it is not a systemic risk that could change the refinancing conditions simply because this has been one that's been slow and gradual to the upside, but not necessarily a shock to the system.
So we watch bond markets, we watch how they respond, Kriti, and of course that pushes up the debt for the cost of debt for many people, for the government, for companies, although some large companies are less French than their French listing might imply, and they can borrow more cheaply. More broadly then, what does all of this mean for the French economy?
Well, it means that maybe some of the places where there would have been a little bit of excess funding, there isn't going to be. So, for example, defense is going to be a key piece. Drug reimbursements, the pharmaceutical industry is a key piece as well, in addition to some of the key players where they are talking about keeping privatization. For example, in just a couple of days' time into next week, railway workers in France are going on strike. This has to do with keeping the kind of French railway in French hands, given that Italian players and Spanish players have entered this market. That is also something people are talking about here in terms of yet another realm of disruption going into the holidays. A lot of that has to come with just how much money the government, the French government, can spend into France. And right now, the answer to that is less, not more.
Kriti, thank you very much. Kriti in Paris there for us all morning, and the team on the ground in full force covering this French story as we watch bond markets there very carefully. Joining us now, our Markets Live executive editor Mark Cudmore to talk about the markets in 3 minutes. Mark, let's start in the region where you are, because South Korea jumped to the top of the political agenda globally, really, yesterday after we saw those actions, martial law declared by the president and then really quickly rewound. I know your team has been writing about the discount applied to Korean stocks, and I suppose this intensifies the rationale behind that discount.
Yes, very much so. We're kind of discussing today which Korean assets will see ongoing kind of suffering from this story, because it's not over yet. There's going to be continued political uncertainty there, and we think it is very much the stock market. I think there are many other things going on in the won. It's a bit harder trade. It probably will suffer a little bit more, but the volatility will make it hard. You can see that even in the last 24 hours, where it's recovered back to nearly where it was before the headlines, despite a slightly stronger dollar. We think the bond markets will do okay because the Bank of Korea will probably get a little bit more aggressive on its rate cuts, especially since the economy wasn't looking too great anyway. Korea is particularly vulnerable to higher costs of trade under a Trump presidency as well. So that's problematic, and that's why the BOK was already inclined to easier policy. So I think it's the stock market where you see sustained weakness here. It's already very discounted stock market. It can get cheaper again. At longer term, this might attract dip buyers, but not anytime soon.
Mark, we've got political chaos in France, we've got political chaos in South Korea. Can we join the dots? Should investors join the dots? Are we seeing politics rather than economics and fundamentals being the prime driver? Is this just a market where you've got no choice but to trade headlines?
I think it's more a coincidence in terms of that these stories are completely unconnected in terms of they haven't been caused by one another. There's no causation link. But I think the flare-up of these political stories is a reminder that, yes, politics will be the dominant driver of markets over the next year, particularly because Trump is back in the White House. But now we're saying it's not just about US politics. So, yes, do trade the headlines. It is about politics. These stories remind us that, and neither is going away immediately. I think the France story is the longer one that'll run on for all through next year.
Yes, so what is the legacy of that? I mean, the euro, we've seen elevated levels of volatility in the euro then, certainly comparing it to pound volatility, Mark, over recent weeks, and a lot of that attributable to French politics. But then, of course, there's the weakness in the underlying eurozone growth story. Yeah,
I think this is going to be an extremely hard story to trade. My underlying view is that, and I said this last week and it maintains my case, is that the French situation will not ultimately get resolved until the market imposes the discipline the government cannot self-impose. And therefore, it's going to get a lot worse before it gets better. But it's not going to be a straight line situation. It's going to be very slow and drawn out. It's not going to be one sudden Liz Truss type moment. It's going to be increasing stress over time. And therefore, I think the currency, the euro weakness, is the easiest way to express that kind of bearishness over a longer period of time.
OK, Euro Weakness in Focus. Bloomberg Markets Live Executive Editor Mark Cudmore, thank you, as always, for your time. You can go to MLIV Go on the Bloomberg terminal, get lots of analysis of the French situation and what's going on with Korean assets as well. Just time to go to Joe Easton with the stocks to watch from our equities team. Joe.
Morning, Anna. So we're going to be watching the French stocks in particular when the result comes in from Paris later today in terms of the confidence vote there. The ones to really keep an eye on are the banking stocks, which have had a big drop over the past month. The BNP Paribas, Credit Ag and SocGen all down more than 10% on a one-month basis, and AXA also lower as well in the asset management space. Also, though, there's some other large caps to keep an eye on. Take a look at Orange in telecoms. themselves 40% sales exposure to France. So really, the domestic economy is a big focus for a number of French blue chips. Then, in terms of the software sector today in Europe, bear in mind that Salesforce jumped around 10% post-earnings yesterday. Now, the company is seeing a big boost from AI at the moment, but also just a general increase in their enterprise software sales. So keep an eye on the big firms here in Europe, in particular Sage and SAP as well. Then finally, in analyst ratings, we've got a double hit for Maersk in the global shipping space. Firstly, Morgan Stanley downgrades to underweight, becoming the 10th bank with a sell rating due to oversupply in the ocean freight market. And JP Morgan slashing its price target on Maersk as well, predicting 30% further downside for a stock that's already been slammed year to date. Keep an eye on Maersk over in Copenhagen this morning.
Joe, thanks very much indeed. Plenty to watch in terms of the European stock story this morning. We'll keep you up to speed as we work our way through the European equity market open, which is now 6 minutes away. We're starting to get some action on the bond market front as well. We'll keep an eye on that too. What have we got that we need to be focusing on? Look, you've got politics all around the world dominating these markets. Look at what is happening in Korea. Look at what is happening in France. Those are our two biggest stories. And that's without us even talking about what is happening in the United States and what is the kind of the build-up to the Trump administration.
Absolutely, yes. And we see, yes, so to the top stories, we see the South Korean won responding, Korean stocks in focus, so the won is higher, the stocks are weaker. We see yields around Europe going a little bit higher this morning. We're up on German 10 years, we're up on French 10 years, actually by about the same amount, 2.5 basis points. So we're continuing to watch those developments. Nothing to flag, particularly in commodities this morning as it plays into London. The oil price a little bit firmer, but big moves over the last 24 hours.
I think we're just waiting for a little bit of clarity on some of these stories, particularly kind of what is happening with France. Look, we've got Korea, we've got that covered in the next hour. We're actually going to be speaking to the Bank of Korea governor. We saw a big move in terms of rates last week. There's no continuation of that today, but we'll get an update on what is happening there. We're going to take you to Paris. We're going to take you to Berlin. All of that in the next hour. The market open is next. This is Bloomberg. Wednesday morning, good morning. Let's talk about kind of yesterday and what it means for today, and then we'll talk about today and what it means for later. This is the story for Europe, the white line Europe, pretty much finishing where it started yesterday. After we closed, though, US markets takes it a little bit higher, and futures are actually ticking a little bit higher from there. But what we're not seeing is that translating necessarily into a more positive picture here in Europe at the get-go. So the FTSE's looking a little soggy this morning. Other European markets looking a little bit more stable. CAC futures are absolutely flat as a pancake. Unchanged. There's stability for you. FTSE 100 down by 0.2%. Euro Stoxx 50 up by 0.1%. Not sure there's much we can read into what is happening here in terms of the politics and what we're seeing around the world. Doesn't seem to be being priced into equities a great deal at the moment. But the day is still young. There's plenty of things that can still happen here, Anna.
Yeah, absolutely. The day is still young. That unchanged futures expectation on the CAC 40, the definition of a holding pattern as we wait for further developments in the political space in Paris. Let's have a look at some of the sectors and stocks in focus this morning. Then French financials, as you pointed out, Guy, a lot of stake in Paris today. Later on today, though, in the meantime, we will watch the banks, we'll watch the insurers, we'll watch the domestic-focused blue chips. And when I say watch them, we'll watch them through the trading day today. But perhaps with the end of the day in focus, will we see a collapse of the government? What will that do to those French financials? And then into tomorrow as well, if that vote, double vote, takes a long time to execute. Ericsson is in focus, winning being awarded a multi-year, multi-billion extension deal. Bharti Airtel awarding that around 4G and 5G. We're also focused on Campari Group. They have a new CEO over at Campari Group after the last CEO was only there for a few months, Guy.
Absolutely. Simon Hunt, I think, is his name. Let's talk about this market open. What kind of a day are we going to see? Well, a quiet one to start with when it comes to equities. We're not expecting much action. We're not expecting a great deal of volatility, but there's a lot to wait for throughout the day. Lagarde speaking, Powell speaking. Oh, yeah, there's a couple of French votes that you may need to focus on as well. So things are definitely in play today. But at the moment, as Anna says, we're sitting on our hands. We're waiting for maybe some more clarity in terms of the developments that we need to focus on. The FTSE 100 futures actually indicated a negative open, and that's what we're now beginning to get. As you can see, we're just drifting a little bit lower. 0.1% to the downside. The 600's up by 0.1. The CAC 40 is open. It's up by 0.1%. We are waiting and we are watching. The Madrid market is up by 0.2%. We'll wait for the Germans. We'll wait for the Swiss. We'll deal with that in just a moment. But at the moment, a cautious start to the European equity session, Anna.
Yeah, absolutely. A cautious start. And we do see more sectors in positive territory than in negative, but it's not by much. But we do have that slight balance to the upside. Retail is the best performing sector there. I noticed technology not doing too badly as well, up by 0.4%. We got confirmation from ASM International this morning that they were kind of as you were with regards to some of the latest moves from the US Biden administration against China with regards to chip access. And so that follows hot on the heels of some reassuring words from ASML just yesterday. And so the technology space may be moving a little bit higher on that in the very short term. Autos and parts is the best performing sector now. Stellantis bouncing up by 2.5%. In fact, it's been a torrid time for that business, of course, having seen the departure of their CEO. So we watch that one go a little bit higher, by far and away the best performer in that sector, up by 2.6%. Healthcare is where we see some of the downside, and that sort of fits with a slightly more risk-on picture that we're seeing today, at least in this window of calm that we see then in markets between not really knowing what happens in Paris and then knowing what happens in Paris, which comes later on today and certainly into tomorrow's session.
Just doesn't seem to be an obvious political story. We started the show talking about politics and the chaos and the kind of the headline trading that we've seen over the last kind of day or two. Feels like the France is kind of in focus, but the focus maybe is further ahead of where we are right now. It's really interesting. Campari is up. That's on the story we were mentioning a little bit earlier. Stellantis bouncing back. These are single stock narratives that maybe are moving the market. You are seeing AP Møller-Mærsk down. I think there's a downgrade in that space this morning as well. That stock's down by 2% on the back of that. Aegis is in focus. I think that may be an XD. So there's a few kind of single stock names, but I can't discern a clear trend.
Yeah.
Or obvious kind of sense of direction from these European markets.
Yeah, the sense of direction is a holding pattern, isn't it? It's sort of, as you say, sitting on our hands, standing still, waiting for more clarity, certainly out of the French situation. Have we reached the end of the story in South Korea, or is there more to discover on that front? Let's talk to Nanette Hechelefeld-Derb, CIO for EMEA at Lombard Odier, who can weigh in on European stocks this morning and the broader macro picture for us. Nanette, good morning to you. Let me ask you about what's happening in Paris and the extent to which it's affecting asset allocation for you. So what are your thoughts? What's your thought process around French assets, given the way things are unfolding in the French capital?
To start with, I think we have to acknowledge the hung parliament, which was going in the first place to make any government formation quite difficult in France. And hence this political vacuum to be one that could be recurrent. And in some sense, I'm thinking about it as a stable vacuum because of exactly the parliamentary context. Stable, why? Because in such a constellation, it is very difficult for a government to take any specific economic policy that is perhaps more marked, and that is in some sense the guarantee for stability. Therefore, I'm not too surprised that the market is relatively phlegmatic at this point. After all, there are a couple of very important points to make here in terms of the French situation. This is not a crisis of the style we had, for example, during 2012 and 13 with the European debt crisis. France has a current account deficit that is tiny when you think about it, which means that it has the ability to recycle and fund the government debt internally. That is a strength on which markets can take solace with and build on. And also French companies on the equity sector in the various sectors are actually companies that have exposure to the global economy more than only to the domestic economy and domestic policy.
That's all great, but if you're a US investor, why on earth would you invest in France right now? Why would you invest in Europe? That's what we need to see happen in order to turn these European markets around.
And this is why, at the moment, we, for example, at Lombard Odier, we are underweight European equities altogether. French equities not particularly within that context. In fact, the underperformance so far and the valuations might suggest over time that there is a catch-up that this market could have. But European equities, European companies, and the European economy more largely is having headwinds and challenges that is quite ill-equipped at the moment to address other than with central bank and monetary policy. That with the US, where we have now a policy that is likely to pursue deregulation, to take measures that are supportive for the US exceptionalism, and you end up, in spite of high valuations, to certainly prefer that market in terms of the outlook for earnings.
OK, so the US has, all of that exceptionalism, much talked about on this programme, Nanette. I understand from your notes that, yes, you like US stocks. You have some interest in Japanese, Taiwanese stocks, also Korean stocks. I wonder if you can talk us through your thinking, what you, as an investor in Korea or somebody who's interested in Korean stocks, there's a lot of tech obviously being exported from that economy. How do you view, from an international investor perspective, what we've seen there in the last 24 hours?
Let me take just a step back to make the point that Japan, Taiwan, South Korea are certainly among the markets that we see benefiting from an upcycle. And we are constructive on the global economy for next year. Central banks are engaged on a rate-cutting path, and the US is likely to pursue stimulative policies altogether. So we think about the general environment supportive for cyclical markets and cyclical stocks. And now to South Korea specifically, we had some surprise with respect to these most recent developments, probably as most market participants would have had. But the very precipitated reactions afterwards are probably going to rapidly refocus investors on the fundamentals behind the market. So at this moment, I think that keeping a steady hand is certainly what has guided us through these very unusual events of the last 24 hours for sure.
So is this a buying opportunity in Korea?
Well, we have had a positive stance with respect to South Korea. At the moment, we are minded to keep that.
Nanette, thank you very much indeed. We'll leave it there. Nanette Heschler-Fayed, CIO EMEA at Lombard Odier. This is the question. You look at these valuations. You look at what's just happened in Korea. The stock market gets dinged up. Is that an opportunity to get in? You look at Europe, super cheap valuations. You look at what is happening in France. You look at the political instability that we have in France, in Germany, providing maybe opportunities to get into these markets at very reasonable valuations. But nobody's interested.
Right, yeah.
Because the US shining hill is over there, and that's where you want to go.
Yes, we're almost bored of saying that yesterday we got a new record on US stocks. I mean, it just happened so many times during this year that it doesn't seem to be remarkable enough to mention. Korean stocks down by 1.4%. And one thing that does unite many of these stories, and not directly, because they're clearly very idiosyncratic and very domestic in nature in many ways, but the new President Trump, the arrival of another Trump presidency and the tariff implications of that is going to have an impact on all of these global assets. And thinking about that as we head into the new year and what we don't know around his intentions is going to be really important. This is a picture of French assets right now. French stocks up a little this morning, up by 0.3%.
Absolutely. Ignore the percentage at the bottom there on the spread, because that's not in any way relevant. But the spread between Germany and France is relevant. What we really need to know about is what is happening within France, particularly within the business community. Christie's in Paris, and she's joined by the perfect guest to answer that question.
Guy, Anna, it's fascinating to be here. I feel like I'm learning so much about kind of the dynamics that are really evolving here. It feels like such a historic moment in France, and yet when we're talking about the ripple effects, that might take a little bit longer to actually get to in terms of actually seeing this show up in the economy, seeing this show up in companies, and of course, perhaps something that the markets have been talking about for 6 months or so. I've got the perfect guest to talk about it here, Fabrice Le Sachet. I'm going to get that right. The vice president of MEDEF, basically France's largest France Trade Group, joins me right here in Paris, outside, by the way, the National Assembly.
Hello,
we thank you
morning.
So much. Good morning.
Welcome in Paris.
Thank you. You're very cheery for what feels like a little bit of a gloomy day in French politics. We're talking about this historic moment in a no-confidence vote in Michel Barnier, a budget that may not get passed through. How does it show up in the businesses you represent?
The issue for us is stability, because you know that the cost of refinancing the debt for France is huge. It's 50 billion per year. And the projection, if nothing is done to tackle the issues, will be 60, 70 billion. And we should use this money to do something else. And the problem is that if we don't have a government, we go back to the budget of 2023, and we don't have the choices that are needed to cut the spending, because this is what we need to do. We have 57% of public spending on GDP.
Yeah.
Netherlands, Spain, Portugal, UK have dropped down the public spending. We should do the same. And the biggest issue is pension, and we should tackle that as well.
So you represent some of the biggest corporations in France, companies that are multinational by design. What we're seeing in other parts of Europe in terms of competitiveness, in terms of dealing with some of the volatility in the fiscal side, and of course out of the United States and China as well, has been the story of almost incentives, of subsidies, of spending in a big way to incentivize growth domestically. France can't do that because of the fiscal handcuffs you just mentioned. What can they do to support their businesses locally?
The problem of France are not only France, it's European problem. We have a collapse of the industry. You see that in Germany. You have seen in the news. In France, Airbus, Valeo, Michelin have announced some plan to cut jobs. But in Germany, you have Bosch, ThyssenKrupp, Volkswagen. The problem is cost of energy. It's slowdown in China with overcapacity that come to Europe, and it's trade war that do the protectionism, and we have more tariffs. And you know that Europe is the region that is the most dependent on exportations. And the model of Europe with cheap energy exports come a little bit to an end. And we have on top of this the Green Deal that we did since the last 5 years with no vision of competitiveness, of growth, of business. And we need to bring that back in Europe. So there is a new commission now. So MEDEF is fighting at the Brussels to have simplification. You see Millet and Musk is a wake-up call for Europe because you have seen all the plan for deregulation there. We don't want to do the same, but it's a wake-up call that the complexity of doing business in Europe is a problem. And we see that the industrial production of Europe dropped down since 2000 compared to China by twice. China go up twice, 2 times more, and Europe twice down.
The fact that it takes Javier Milei out of Argentina and Elon Musk out of the United States for Europe to wake up is quite the take. Let's talk about some of the politics a little bit close to home. Outside of France, you mentioned Brussels. We could have days about the issues there. I want to talk about Germany. You mentioned a lot of German companies. Does the fallout and the politics and the debt brake suspension in Germany have a bigger effect on French business than the collapse of the French government?
Germany is a powerhouse for Europe. Czech Republic, north of Italy, France are depending heavily. Germany is our first trade partners. These Eastern, Central European countries are in the value chain, in the supply chain of Germany. So when Germany is slowing down, it's Europe that slows down. It's not good news for Europe. We need a strong Germany. We need strong UK, by the way. It's not inside Europe, but we need strong UK. We trade a lot with UK. Yeah. We need a strong France. And we need to fix the problem in Brussels, because in the last years we had some choices, monotech, obsession by ideology. For example, in automotive, only EVs. It's only Europe that do this. In China, they do EVs, they do thermal engines, they do hybrid, they do hydrogen. In US, if you take the energy, they do shale gas, they do oil, twice more than Saudi Arabia they produce. They do renewable energy. And now they invest in nuclear energy with Microsoft, Amazon, Meta, and American banks. So they do all. They don't have an obsession for monotech. Europe should give more breathing space for innovation. Let the company do their job. And less reporting obligation. We have CSRD, CS3D, non-stop. So let the company focus on products, services, commercial development.
Let's talk a little bit about the development in terms of French companies that want to grow. So much of a big piece of that is refinancing conditions. That's where France is getting into some tough spot. I believe we're looking at 84, 85 basis points right now, and the spread between French debt to German debt. Does that make it trickier for French companies to grow, and how?
Yeah, it's complex. Of course, when you have a high interest, but not only for companies, for households.
Yeah.
We have a big real estate crisis. Construction sector is very much down in France because of the high interest rate that we got for a long time. And so it touched the households as well. Companies for sure. That's why at MEDEF we called the ECB, that is independent, but we called the ECB to ease the interest rate. And I think that some movements are expected at the European Central Bank to have some interest rate a little bit cut, because of course it will boost the ability of company to invest. Because now we need to invest. We need to invest not with public money, with private sector money. And for this investment we need two things. One, capital market union inside Europe, because titrization is not existing. US capital markets is huge with many tools. We don't have that in Europe. We need that because every year Europe sends to US 300 billion euros. Yeah. That's one. And second thing, we need profitable projects and business. Otherwise, how you will invest in Europe? And for that, we need a framework that works for companies and businesses.
So in the absence of that, final question to you. How do the companies you represent and that you're talking to prepare for what sounds like really tough refinancing future, a government that may not have the leadership after this new confidence vote for a couple of months here, the threat of Germany, the threat of China, and the threat of the United States? What are French companies doing to prepare?
Our companies are global. They work everywhere and they have a structuration of financing.
That's the risk factor for Greece, no?
Our companies work everywhere. They have refinancing and financing opportunities in different regions. They are very global, more than other countries. The CAC 40 works everywhere in the world. So the opportunities to finance themselves where they operate is a regional issues. They don't finance all their operation in the world from France. The problem is for the state more than the company. And what you mentioned, the spread with Germany, the rate at 10 years, curve yield with Greece, etc., can go down again very fast because the markets are volatile. If the right signals are sent, if we have stability, if we have a government that shows that we will tackle this pension issue, that we will tackle this fat state to make it more lean and to have reforms, then this will go down very, very smoothly and fast. We have seen countries that did it, so France can do it as well.
All right. A very optimistic approach from the representative.
We are in business, we are entrepreneurs.
You might be alone on that island. Fabrice Lestrade, we'll keep the conversation there. We thank you so much joining me here this morning in Paris. Guyana, he seems very optimistic, and I've got to say he's not the only one. I've spoken to some of the folks here. They're saying this is something that so many people have prepared for, and that even if we do get this collapse of French government, it may not create the ripple effects that we thought it did, say, 30 days ago.
Nevertheless, that's quite a shopping list. I was just writing down, Kriti, some of the things that he was talking about that was on his shopping list. Fabrice's political stability, that sounds great. That looks like it's going to be a tough ask right now. Lower interest rates, we may get them, but not that quickly, coming through from the ECB. A smaller state in France, less bureaucracy. Bureaucracy is a French word, isn't it? Isn't that maybe at the root of all of this as well, that we have this huge state in France? It's quite a shopping list. Are the people you're talking to suggesting that any of the things that are on that shopping list are available for selection right now?
It doesn't sound like it. I think that's the irony of this conversation. It all sounds great. And he does make a crucial point in that spread can actually compress very quickly. We do talk about it in the context of Spain and Greece. We also have to keep in mind that the trajectory of Greece, the trajectory of Spain has been in a downward trajectory as well in terms of the yield premium. France is just meeting it on kind of the uphill battle. That being said, the political stability question is a crucial one because you could actually see the French government unite in the face of not necessarily the domestic politics, but what happens in the United States and what happens in China. To me, I think the highlight of that conversation, Guy, was that the ripple effect of Germany may actually be a bigger deal.
Kriti, thank you very much. Kriti Gupta, of course, in Paris, keeping us across that developing story. Another developing story. Opposition lawmakers in South Korea are calling for President Yoon to be impeached after he plunged the nation into a political crisis by briefly imposing martial law. Joining us now, Bloomberg Insight anchor Haslinda Aman with a guest. Haslinda.
Well, Anna, we know that the Bank of Korea has been trying to allay concerns, wanting to bring calm to the market. And so far, we've seen some reversal in the losses of the won. Let's get perspective from the BOK governor. We have Governor Ri Chang-yong joining us from Seoul. Governor Ri, good to have you with us. I'm just wondering how you're assessing the fallout in the market so far.
The martial law declared last night has been lifted within a few hours, and the financial markets are stabilizing quickly. It's a relief that the impact of the market was short-lived, while it is still true that it's hard to predict the political dynamics. But I believe that the economic dynamics in Korea can be separated from the political dynamics, given our strong market fundamentals and also the matured democracy.
So do you think you've done enough so far?
No, what is now is actually I'm very happy that the impact has been short-lived. Definitely, we have to see how these political events will evolve. In the meantime, we focus on providing ample liquidity to stabilize the market. And when we look at the market, we do not see any malfunctioning. So, but on the other hand, we by expecting that in preparation for the future possible financial unrest, we actually strengthened our liquidity injection facilities, such as increasing our repo purchase agreement and also extending our eligible securities for open market operation. And so far it's okay. So far it works well. Yeah.
So far, so good. But in my conversation with a former trade minister of Korea, he did talk about how he's expecting prolonged political uncertainties. How prepared is the BOK for that?
Actually, I watched your program. Actually, I think he was more concerned on the other structural factors, not only this prolonged the political issue. But I think it's not yet decided. It's very hard to predict which options the political process will evolve. But I think you know that the Korean government officials are well trained. We are well experienced in handling the several difficulties. So I think while in government in transition or while in this transition period, which we believe a couple of months, I think we have many tools and talented government officers to handle this macroeconomic situation.
Might the tools include another rate cut? You did a back-to-back rate cut in anticipation of Trump's tariffs, which you say will weigh on the economy. Might we see you cut rates even more?
Oh, you mean that because of this political turmoil? I don't think so, because as I mentioned, this political event was very short-lived, and I do not see any reason why it has to change our economic outlook at this moment. We are focusing our growth rate this year will be around 2.2%, and the next year it will be around 1.9%. But I think we are still, at this moment, stick to our forecast. But I believe that our growth focus will be more impacted by the structural factors, such as change in global value chain, and also the facility rate and demography in our country. So these structural factors will be much more important factors in determining what will be our monetary policy will be and how we'll change our forecast, rather than this political event, which is short-lived yesterday.
Governor, we know that you have regular meetings with the finance ministry, also with the financial regulator. That meeting now becomes even more important given how the government is now in disarray. I'm just wondering, what's the significance of those meetings now, and what kind of issues do you think will come forward?
I can be very proud that this we call F4 meeting, financial experts meeting. I think that this is actually, I have been working for many other institutions in many other countries, but I think the communication channel that we developed in the last 2 years through this, among our 4 regulators and finance ministers and me, we discuss every issue. And then we actually honor our independence, but we discuss finance stability, monetary, fiscal, every issue, we exchange our views. And actually yesterday, after this political event happens, around 1:30 a.m., 11:40 a.m., we gathered together, discuss what we can do together. And then we also had another meeting at 7 in the morning. Actually, today was a tough day for me. I'm already sleepy, but I think this cooperation mechanism is worked very well, covering almost every economic issues.
Governor Rhee, I'm just wondering, with regards to the meetings that you have with the policymakers in the finance ministry, for instance, I mean, should the framework be tweaked perhaps, improve the leadership and, the effectiveness of those meetings, given the situation of the government right now?
I think I like this this informal platform, because it becomes formal, you need to prepare, and there are a lot of bureaucracy can be involved. But given our intimacy, and we can discuss many issues, and by honoring our independence and the separate role of each institution has to do, we can do the perfect division of labor. For example, today, Bank of Korea called on the Special Monetary Policy Committee meeting. We focused on the liquidity injection today, and the Financial Regulatory Services focused on the measures how to stabilize stock market. And then Minister of Finance is coordinating many policies, and they actually work hard to develop and monitor the FX market. For example, this kind of division of labor has been possible because we have discussed this policy consistently, coherently across our institutions.
You talked about how there is no need to relook at your rate cut trajectory. How confident are you about the economy, bearing in mind that we're seeing protests in the streets? I mean, tomorrow we're going to see the Korean Railway workers going through the streets as well in protest. Might that not impact investor sentiment? Might not that impact consumption? Might not that impact confidence in the country and the economy?
Probably the factors you mentioned could have been a very important factor if the president didn't accept the National Assembly's recommendation to lift the martial law. But given that the martial law has been lifted, and now I think if you look at the other side of the coin, I think political certainty is actually increased, not decreased, because in the last couple of years, I think the tension between the ruling party and opposition party make everything in a deadlock. But now I think some kind of political certainty can also help our projections. Yes, as you mentioned, there may be some short-term difficulties, but I think if you can look at the other side of the coin, there is also a positive side. And I think if you look at what happened yesterday, actually, I think that you can see that Korean citizens and our politicians and our political systems are much more mature and safe. And I believe you mentioned the labor unions protest, but that kind of protest has been around for last 10 years. And if President didn't lift the martial law, that protest could have been aggravated quite significantly. But I don't think that, yes, I think regarding this impeachment effort now, there will be some noise. But I think that noise is not as
right.
will not be very large compared with what we have been experiencing so far.
Governor Rhee, you're expressing optimism despite the political turmoil. What scenarios then would worry you?
Look, I do not mean that everything will be smooth. I think the last couple of months, there will be a lot of tensions among the political parties, and that this political debate won't be as smooth as probably we wished for. But what I mean is that, those kind of things are within the realm of what our government officers and experienced government officers and professionals can handle using various tools that we have. And on the other hand, what I'm worrying about is that it's more like there are a lot of global uncertainties, as you mentioned, that the major countries, policy issues, tariff, and also changing of global supply chain. And as you mentioned, that the geopolitics in Europe is also quite uncertain. And what I'm worrying about is if our own problem is, in some sense, amplify the global uncertainty, then maybe we may have a little bit, more difficulties than I'm currently expecting. But I think what we are doing is we have to adapt what has happened. So at this moment, whatever happened in politics, whatever happened in political projections, I think the government officials like us and central bankers in Korea are ready to react to it.
Investors we talk to say we should brace for volatility, especially in the Korean won. We've seen it move, as low as 1.5%. It's recovered somewhat. Is there a red line in the sand for the Korean won? I mean, at what stage will you be defending that currency?
As Linda, Korea has been on the flexible exchange regime for a long time. And, we are not targeting for specific level of the exchange rate. But on the other hand, because Korean won is not internationalized, we are concerned on the volatility of our exchange rate and the pace of the exchange rate movement. So definitely using the integrated policy framework, we are trying to stabilize the abrupt movement of exchange rate. But at this moment, I think if you just look at what happened yesterday, for example, as I mentioned, the Korean won depreciated quite sharply, about 3% immediately. But now I think we are slightly above the level that we had before this political event happened. So I think in some sense, using various tools, including our liquidity injection, in the FX market too, I think we are now managing the situation better than you or some other people may as a concern. My basic point is that if you look at what happened in our political arena, this tension happened because of this event has happened because of political tensions, not any problem in economic fundamentals. So in that sense, I think that the impact will be short-lived, and we can focus on the economic strengths and the weakness of Korean economy rather than political side effect.
Governor, for investors looking for some kind of clarity on the situation in Korea, what can they expect in the next 24, 48 hours? From where you're seated, what can be expected?
I can ask what has changed. Actually, I think during the night, there was 6 hours, uncertainty increased significantly. Now we're back to it. So as you mentioned, this may cause a more internal fight among the politicians. And you can see those kind of fight. I wouldn't mention country's name, but you can see many other countries have similar political fight at this moment. And then, this kind of fight is not affecting our fundamentals. It doesn't change our stock market operation. And actually, if you look at today, our financial market functions very well. The risk is there, but I think I'm not downplaying the risk. There is a risk, but like in other countries, but that risk is, given the nature of the risk, is within the range of what you can manage.
Governor, thank you so much for your time. Governor Lee Chang-yong joining us live from Seoul. Anna, Guy, handing it back to you.
Haslinda, thank you very much. Bloomberg's Insight anchor Haslinda Amin joining us there with that really important conversation today, Guy. And really interesting to get the Bank of Korea governor's views here, talking about this situation stabilising very quickly. Of course, there are risks. We have to wait and see. But even suggesting that this is not going to increase the pace of rate cuts because this has been resolved, in his view, pretty quickly.
It lasted 2 hours, 48 minutes. It was fairly quick in terms of the imposition of martial law. Looks like the situation is stabilising. There is a live shot coming from in front of the National Assembly in South Korea. You can see that there. Clearly, there are protesters demonstrating in front of the parliament right now. But it does feel as if the situation has resolved itself in a relatively straightforward fashion. You've got to remember as well that the Bank of Korea did deliver a 50 basis point cut, which caught many people by surprise. In some ways, it had already front-run this very prescient of the central bank.
Yes, and I know there were some in the markets who were suggesting that maybe these developments might lead the Bank of Korea to consider doing more of that to shore up the economy as we head for the uncertainty of another Trump presidency and what he might want to do in terms of tariffs, because this is such an open economy. And it is an economy that has very recent memories, just back to the late 80s, of martial law, of not being a democracy. And so all of that was triggered a little bit, I think, yesterday, talking to people on the ground.
Absolutely. Let's talk about what is triggering Europe European markets this morning in terms of what we're seeing on our screens in front of us. We are waiting, of course, for what is happening in France to play out. We're waiting for Christine Lagarde to speak a little bit later on today and for Jay Powell to speak as well. At the moment, you're not seeing really that much activity in terms of the yield story, a little bit of a tick higher. So bond markets are selling off just a touch at the moment, but nothing violent in European markets this morning when it comes to the sovereign story. In terms of the equity markets, again, a lot of hands being sat on, I suspect, today as we await further developments. As you can see, we're a little bit higher across the board today. You are seeing a little bit of a bounce back in the French market, which is interesting. Maybe some unwinding of some of the concern that we've seen in that market as well. We're also getting some details emerging about what the European economy is doing. We're getting some PMI data. Some of this is obviously secondary data, i.e. the second read from some of the core countries. But Spain's numbers this morning are out as well. Spain services PMI out at 53.1. That's down from 54.9. So a little bit of a softening in the data there, pretty much in line with expectations. In terms of the composite number, that means that we've dropped from 55.2, which is a relatively strong number, north of 50, down to 53.2, which is still OK. A little bit softer than maybe the market was anticipating, or the economists that we've been polling had been anticipating. 53.8 was the survey number there. But certainly Spain stands out maybe as an area of stability within the Eurozone right now. Let's factor this into our next conversation. Gonzalo Gortázar, the CEO of CaixaBank, Spain's third largest lender by market value, joining us around the table. Good morning.
Good morning.
Nice to see you. The Spanish economy looks like it's doing great right now.
It is indeed, certainly relative to Europe. We're expecting close to 3% GDP growth this year, so very much differential growth.
OK, let's talk about what you've been doing with your company. You outlined some financial targets recently. The market seems to have been a little bit disappointed, so I'm interested to get your take and maybe a kind of a setting of the record straight this morning. I think the concerns surrounded maybe the return of money to shareholders and the maybe more vague targets that you delivered upon. Do you think the market was right to react in the way that it has done? We've seen the stock dropping a little bit.
Market always reacts as it wishes. So nothing to say about it. But basically what we're talking about is a transition from a phase in which we have had fairly low growth, I would say stagnant growth in lending. So we didn't need to retain capital to fund that growth, to an area where we're seeing some growth, something around 3-4%, which means we're going to retain part of this capital to fund that growth, because this growth is coming at profitable levels.
So it's a good thing that you're not returning money to shareholders because it signals that the bank is growing. Is that the correct steer?
Absolutely. We prefer to invest the capital in the bank, provided it provides a return ahead of the cost of capital, which is the case. We're returning 15 to 17%, depending on which year you look at, which is obviously higher than our cost of capital. So retaining that money in the bank is good news for shareholders. That's what we are explaining.
OK, Gonzalo, yes, maybe some of those shareholders listening this morning then and rethinking that stock market reaction. Lingering a little on the strength of the Spanish economy, what are you seeing on the ground that is driving that? What gives you confidence, or maybe you don't have confidence, that that path of strong growth continues?
Well, we are confident. We're expecting the economy to grow above 2% for the next 3 years. So a slight slowdown from the current 3%, but good levels. And I think the confidence comes from the tourism, which continues to be a good boost for growth. Immigration, we are actually increasing population by over 1% a year, and the job market growing by 500,000. Half of that growth comes from immigration. And then generally, we're also seeing services. In Spain, we have a lower degree of reliance on industry and hence a smaller weakness with respect to higher energy prices.
And I mean, to Guy's point, Spain does look like this area of stability in the Eurozone right now. I mean, how things change from 2011 and from all of that period that we've covered so intensely, does that make your job easier? The pitch to international investors, the conversation with stakeholders, is all of that easier because of the growth backdrop in Spain right now?
I would say it's easier, but particularly I would say it's nicer because it's always more fun to build than to resist. And really the Spanish economy, as you said, had gone through very difficult times, but has done obviously the work, so now we can face the future with confidence. And for us, a bank, very correlated to the economy, it's actually great to have good economic environment, absolutely.
I remember that period that Anna's talking about because I remember the Bankia deal that you guys did. Obviously,
Sure.
that was the kind of the M&A story of the moment, and I remember it so clearly. Do you see more M&A coming down the pike? Do you think more banking M&A is a good idea in Europe right now? How are you thinking about it? Obviously, there's a big deal underway in Spain right now. Is that something that should be welcomed?
Well, I wouldn't like to comment on individual deals, specific ones, but generally consolidation, I think there is room for consolidation in certain countries more than others.
Including your
and
bank?
It's a good one. For us, I'd say we have the right size. We have 25% market share. I think that is appropriate, and we are focusing now on organic growth. But generally, obviously, not everyone has that kind of share, so it's legitimate that they look for deals.
So I have to ask you a question that continues to vex me. European politicians, they talk about wanting a banking union. They talk about the need for cross-border deals. They like the idea that we get a stronger banking sector because that's good for Europe and will ultimately help drive the European economy to the place that it ultimately needs to go. Yet when deals actually get proposed and CEOs like you say, I want to do a deal, there's a lot of wringing of hands and a lot of concern and a lot of pushback. Can you explain that to me?
Well, it's actually, if you look at, for instance, the Capital Markets Union or generally creating a real single market in Europe, everybody likes the idea, but when it comes to specific concessions, actually people are more reluctant.
Why is that? Is it because of the political chaos we see in places like France right now? I don't want to have my banking risk exposed to that kind of cross-border difficulty.
Well, it's been always there, the fact that sort of nations and states want to protect that their big companies, not just banks, are in national hands. I think we need to look beyond that to create a real market, a single market across Europe, because then we will be in a place where we could compete with the US. But it requires some sacrifices. You don't get there without having some individual consensus, state by state, sector by sector, company by company. So we all together need to do those kind of judgments.
Do you think then, Gonzalo, that we will see more cross-border M&A? I mean, this is seen by some people as one of the solutions to European competitiveness.
I am not sure that is the main solution for European competitiveness, to be honest. I think what we need is a real single market, and we don't have that. And while if we get to make banks larger, but in markets that are very different, you're not going to get the synergies that you want. You want a real single market, banking union, resolution, liquidity mechanism, deposit guarantee schemes, taxes, commercial law. There's a lot to be done.
Can I ask you something about another subject? You told me back in 2023 when we were talking about extreme heat in Spain. You told me that extreme weather was going to make certain parts of the world uninhabitable. We've covered the growth story out of Spain. We've also covered the dreadful flooding that we've seen in Spain in recent months. How are you as a bank, as a business, preparing to deal with such uncertainty on your doorstep?
Well, it's a tragedy, indeed. We're actually the largest bank in the region, and we have seen it very close to us, and we are working very closely with authorities and with our clients to make sure we help in the reconstruction. So reacting very quickly to these natural disasters is very important, and large companies like us, the largest in the area, are well prepared to do that. We are obviously incorporating all these risks in our analysis. So we have been working with the ECB for now some years on climate risks, and all these are incorporated in our models to make sure that we're not destabilized by an event like this. This is work in progress. We need to continue improving on all these, both in the bank and obviously outside the bank, to prevent these kind of disasters.
Gonzalo, thank you very much. Thank you very much for coming to see us. Gonzalo Gortázar, the CEO of CaixaBank. We thank him for joining us this morning. So perhaps political turmoil stands in the way of M&A within the banking sector and perhaps elsewhere in Europe. Let's talk about some of the political tensions that we see in Europe. Not to be outdone by France, the German Chancellor Olaf Scholz faces a no-confidence vote in his government later this month. It follows the collapse of the three-party coalition after Scholz fired the finance minister last month. An early election is due to be held in February, and polls give the Conservative alliance between the CDU and the CSU a sizable lead. Let's head over to Berlin and join Bloomberg's Oliver Crook and a guest. Oliver.
Yeah, Anna, thank you so much. I'm very pleased to be joined by Jens Spahn, who's a longtime CDU party member and, of course, been member of the Bundestag for more than 20 years now. You'll recognize him, of course, from those daily COVID briefings. He was a health minister under Angela Merkel and has held posts as well in the finance ministry. Thank you so much for joining us. Welcome this morning.
Thank you for having me. Good morning, Oliver.
And so we're sort of beginning the conversation, I think, with the sort of obvious economic problems that we have here in Germany. The SPD and this coalition has failed to turn around despite, the warning's been out there for a while. What is your sort of treatment for the sick man of Europe to deal not just with the symptoms, but really the underlying disease within the economy here?
Well, actually, we really have a very strong disease, to put it this way. We are the only industrial country in the world which has a shrinking economy, actually, 2 years in a row. That is what we don't have seen very often in the Federal Republic. So we need a recipe for more competitiveness again. Taxes down, bureaucracy down, energy costs down, labor costs down. Actually, kind of the standard approach to get competitiveness back. But that is what is desperately needed. We need a growth in productivity. For the last 8 years, we have not seen any real growth in productivity in Germany. So we need to make this industrial country that we are, with still a big share of industry, energy using industry that is giving into our GDP. We need to get back growth. We need to make Germany strong again, actually. That's the approach.
And one of the sort of great criticisms, I think, by a number of parties politically, but also outside of Germany, and one that you've heard, I think, for a very long time, is a question about borrowing and really being able to debt finance in moments of extreme crisis. We've even heard, actually, overnight from the president of the Bundesbank, Joachim Nagel, who has been saying that basically the debt brake needs reform, there needs to be investment. Is this something that the CDU is willing to consider and looking to look at, and where to spend that money, if so?
First of all, the debt brake has really proven its worth in the last 3 years. Imagine this coalition, this left coalition, without any debt brake in the constitution. They would have made hundreds of billions of debt for consumption and social welfare instead of investments. So we need to have a clear regulation, and we want to keep it. Actually, I never want to get into a situation like France, that the markets, the spreads are forcing us to cut the budget. So the debt brake in general we want to keep. But with the debt brake, that is important to see, you can make debt. I mean, the federal government this year and next year is planning to have 50 billion of debt each year. That's 100 billion. So the question is how to better invest and how to prioritize in the budget. Less social welfare, more on defense and investment. That are hard decisions to take. But in times of Zeitenwende, as Chancellor Scholz called it, but he never lived up to it politically, you need to reprioritize the budget.
Okay, but so then could you see, for example, an emergency fund on, say, the question of defense, for example, one of the areas in which, A, there has been huge underinvestment and the urgency of which has been very clear by the sort of war with Russia, but also is potentially a bargaining chip with a new Trump administration, which is going to want to see some spending from Germany on military and probably within the United States for its hardware?
First of all, we make the promise that what we promised in Wales out of our own interest. We are not doing this for Trump or the US. We are spending more on defense in our own national interest. We want to reach the 2% of GDP as a starting point, not as a ceiling, getting closer to 3% afterwards. I was just in Poland. They are reaching almost 5% of GDP. So we need to spend more. But first step to get there is prioritizing. As I said, the budget of Bürgergeld, as we call it, the social basic welfare system here in Germany, is as big as the regular defense budget. That is not the right relation that we see. And we want to get back growth. I mean, a country whose economy is shrinking obviously has less money to spend for defense and for investment. By the way, the whole role Germany plays internationally is because of our economy. We are the third largest economy in the world, and a country that is not growing economically will not be heard in Washington, will not be heard in Brussels or Beijing. So we need to get back growth for several reasons, obviously.
And one of the issues that could hit that growth is potential tariffs, which, as we've heard a lot about from Donald Trump, and he's taken Germany as his main target for a very, very long time. How do you envision that relationship being? You went to the RNC, you've met with the Trump team. How do you imagine the German-American relationship under Trump?
In general, I would say if we were better prepared, unfortunately, again, like 2016-17, Germany and Europe is not very well prepared for a new Trump administration. What do I mean? Why is there nothing on the table that we actually are offering to President Trump and the US when it comes to trade with China? We could say, let's have a common approach towards China. To do less, to de-risk, but then we need to do more in our transatlantic trade relations.
Is that something you would advocate if you were to be in government?
Yes, absolutely.
Away from China towards U.S.
Yes, but I would connect the two and try to find common ground on this with the U.S. government to say, if we are an export nation, we need to export. If you make it possible to have more trade transatlantically, we can do more towards China in the regard of de-risking. So you need to make deals, as Trump would call it.
And a final question on Ukraine. What is your sort of CDU's position on how to end this war? Obviously, we're now beginning to see the sort of negotiating lines, both from Russia, both from Zelensky, increasingly from Trump. What do you think is a good resolution here? Are you open to the idea of at least paving the way for a NATO membership for Ukraine in order to end this war?
Well, most important is that it is not negotiations where Putin, the aggressor, is actually getting all he wants, like winning. So we need a solution, obviously through negotiations, that is trying to find the right balance in this very difficult situation. At the same time, we see that it is becoming more and more difficult for Ukraine. They need security guarantees for sure. However, if NATO or other ways, they need security guarantees to be able to move into negotiations, and that should be done by Europe and the US together. So actually I would wish for a chancellor that is talking to London, Paris, Warsaw, Brussels, and then with President Trump to have a kind of contact group of Europe together with the US. Right now, this government here in Berlin is isolated in Europe. No one is talking to him, to Olaf Scholz. No one is talking to Germany, and that's not a good situation these days.
And certainly it feels like a very sort of a difficult time for Europe to not have leadership at the national level, which I think we're missing not just in Germany, but
in Europe as well.
Europe as well. Thank you very much, Jens Spahn. Thank you so much for joining the CDU lawmaker there, speaking to us this morning in Berlin on the sort of election campaign and the struggles facing the German economy and how they plan to turn it around.
Ollie, thanks very much indeed. Nice interview. While Ollie's been speaking, we've been watching Italian PMI Super Week. Up next, Chrissy in Paris. We will be returning to the French capital as we await the no-confidence vote in the Barnier government. You're looking at a live shot of the National Assembly. We will be back there in just a moment. This is Bloomberg. Let's wrap the show up in Paris. Kriti's there, of course. We're waiting for the no-confidence votes a little bit later on. Kriti, walk us through the rest of the day.
Well, we are, of course, as you said, counting down 4 p.m. Central European time. That's when the debate in the National Assembly right behind me begins. And that is just the first no confidence vote brought by the left. If we don't get that passed, then the right will, of course, give another one. It is all going to be about whether or not, at the end of the day, Michel Barnier has a job and what does Emmanuel Macron do after. But Guy, and I think the crucial bit that I've learned in my time here, my very short time here, has been that the markets are waiting for a gradual increase. It is largely understood by investors here in Paris that you might just not have this yield shock that we saw back earlier this year, that premium, although it may increase slower and slower to 100 basis points, even 150 maybe, it'll go calmly, slowly, and that's what investors were worried about the most. The countdown to that vote, though, does begin, and then it really becomes a countdown to the budget. Can Emmanuel Macron pass it through, or will it be yet another historic moment in the start of January where a law spéciale is getting passed through to get that budget? We have plenty more coverage throughout the rest of the day, plenty of big guests right here from outside the National Assembly in Paris. This was the opening trade. The Pulse is up next. This is Bloomberg.